Hey, good morning. Today's March 19th, 2026. Good morning, YouTube. Good morning, Simple Stock friends, fam, everybody. What's up? So listen, look at this chart right here, you guys. I'm gonna dive into IWM. Obviously, we knew that Powell was not going to bail us out. There was no bailout to be had right now. You know what I mean? The Feds, I think they're taking a very hard position right now, and which just said, hey, you know what? At the end of the day, we're not gonna just jump the gun because the president wants us to. You know what I mean? And so, with that being said, that's why we are where we are. The market, they're acting are a little irrational, but I wouldn't say that at the end of the day because at the end of the day, you do have a war going on. You do have stagflation staggering around. So there's a lot going on. I do believe if we had a headline today that said the war in the United States government is out of the Iran war, then guess what? I think we start to really buy things all the way back up. So I was looking at some cool things today prior to making this video, and I'll share with you guys in a few screenshots. But let's go ahead and dive back in. Look how far back these levels go. Week of Thanksgiving. That was our Thanksgiving high. So we're talking about this stuff. A lot of these levels are going to go back to last year. And look at these. And this is why it's always good to keep your levels and areas of importance. So right here, this box right here, this is at 50. For me, if we start to lose this 243.33, we're going to make our way to the end of this box right here, which is 241.26. That's a whole nother level. Because once you lose 241.46, we've been here, guys, last year. Go back last year. You lose this level here, you're all the way back to 237. That's IWM, so on and so forth. So what else do we see on this screen, you guys? Well, how about a shoulder, a head, shoulders, and then the rest of the body. So to me, that's what's going on, and that's what I see. This is a visual. I'm not saying jump on a punch right away. What I do believe is going to happen this morning, I do believe they're going to try to bounce. I think they're going to try to bounce, and it's just because all this chop, all this chop right here. It's a lot of chop. So with that being said, I won't be surprised if the market, if we open, I'm gonna say this right now, if we open this candle and this candle goes all the way back to this high, what is this, about 245.94 ish? This is the area here. If we open and we're back there already, I am going to short the market. But if we're still at this area, because this is a must hold area, if we're still, every time we come to this line, I'm going to buy this to come back here. And eventually what's going to happen is this is going to get filled and we're going to end up coming back down to this level here. So that, I don't know if that makes sense. I hope it makes sense to you guys what I just said. And again, the thought is we got to fill these gaps. Okay. That's all I'm saying. So if we fill the gaps prior to market open, then yes, I will call this a success. And then what we could do, what they're going to try to do is bounce back to this area where they started to fall from. I don't know, and I don't believe it's really that possible given the circumstances. But will they try? Certainly. Because once they get back here, what does this look like? This looks like a inverse, don't it? So you may get people trying to get in to come back here. Here's that fall, here's that flag. But what if they come back here and they try to fill this back up too? So it's a head on the swivel, head on the swivel. Larger time frame though. Let's go backwards. I did notice this prior to making this video, which I want to show you guys. Look, this is what we're trading. This right here, take this fib. What date is that? This is, looks like, the 21st, and draw that out. And if you take this and you extend it, look exactly where we're at. Look where we're at. We're right about here, which is our, we just lost our 50. Our 50 was here. We lost our 50 yesterday. 250.28 was our 50, right? So with that being said, they have to start closing candles here, get back above price at 245.16. So that's the target. The bulls are going to, they need to get back to 245.16. Okay, this is on a much larger time frame, so on and so forth. So today's close is going to be very important as far as direction. And again, what do we see here? There's that shoulder still. So keep your head on the swivel for that, okay, for sure. Another thing I want to point to you guys. A lot of people say, well, you mean, is it time to start buying? I'm not quite sure. And the reason why, let's go all the way over. Let's see where we actually came from in April of last year. Look at this. Look at this. This is where we came from. So look, when you extend this fib over, where's our 50? Our 50 is back at 220, 220.37. And look how large this one actually is. So with that being said, you know what I mean? We get down to 233, you know what I mean? Just know 220 should be becoming very soon around this area. That's still 50%. So, keep that in mind as well. All right. Um, as far as today, I think I gave you guys my play sets, what I was thinking. We do have pressure down in the markets today, for today and tomorrow, in which you guys can see here. So keep that keep that in your mind. I think they're going to try to bounce, and again, a small dead cat bounce. I think it's the best you get. I think you get a pop and a drop again. When we go to these higher levels, so say they do the pop and drop. Let me get soft. Hold on, let me try to hide this, guys. Hold on. Say they do try the pop and drop, right? What I would do and what I'm going to do is every time that we come back to these significant levels, like in this area here, which is like 246-ish, that area there, every time that we pop back into this area, I will be selling. I will be putting in a put for a day to 2 days out, because that's all we've been doing. We've been coming back to key levels, losing them. Coming back to key levels, losing them. Coming back to key. So what is that? That's a rally sold. So keep that in the back of your mind as well. So listen, guys, I don't want to make this video longer than what it needs to be. As you guys can see, I'm going to share one more screen with you. Bring that on over here. Bam. Cool. So look, don't get me wrong. They do have some targets up based on harmonics, but they're starting to actually lose lose the harmonic in itself. So, don't be too quick to buy. Don't be too quick to buy, but just understand that, you are going to see people seeing this as a buying opportunity, especially in certain sectors. So, head on the swivel, head on the swivel. Other than that, man, this is what we're looking at. Here's that 2 minute one more time. And look at this. This harmonic is almost complete on the 2 minute, and it brings us back to where we're going to buy into. So again, when we open, if we're not here, I'm gonna place a small call to see if we can't cover some of these gaps here. Okay. Other than that, that's my playbook. That's my plan for the day. Enjoy your day. Please like, comment, subscribe. Enjoy your day. Oh, guys, wait. There was one other thing I wanted to bring to your attention. But look at this. Uh, this is a, what was this? When did we have our death cross? Right here. We started to have our death cross, what was this? March 2nd, 2026, when our 50 crossed into our 200-day. You know what I mean? So look how important that was for us. So expect them to try to start holding some of these key areas, but I don't know how long it lasts, especially when you got a war with no end date. All right, let's go. Get to it, simple side.